there's a danger that they lose control of the narrative. They lose control of what they call inflation expectations, and we could see things get completely out of hand. If you can hold on to your gold and silver when you're going through hyperinflation, you will have done well. And actually, I think it's after the hyperinflation, when the dust settles, that you can put especially the gold to work.
Hello and welcome to Commodity Culture, where we give an overview of the commodity space for both new and experienced investors. Before we dive in, standard disclaimer, none of this is investing advice. Do your own due diligence. And today's guest began his career in private banking in Switzerland before he spent over 20 years working in London, where he specialized in the exchange-traded derivatives markets. He is the creator and host of the Innecco 64 YouTube channel and also writes about economics for Tyne Valley Express magazine. Mr. Mario Innecco, welcome to the program.
You're welcome, and thank you for having me on your channel.
Appreciate it. So let's get started with your own journey in investing. How did you begin investing, and how would you describe your overall investing philosophy?
Well, I guess indirectly, I started investing when I got my first job in Switzerland. I was hired by this small private bank or portfolio manager, and in Switzerland, they have a pension system, a private pension system, and they invested for me. But I also got interested in trading, which is a little different than investment. But yeah, that's how it started. I wasn't one of those people who started out as a teenager or anything like that. I only really got interested in the markets and trading probably in my early 20s.
Nice. And how would you describe your overall investing philosophy? I know you have a deep interest in real assets like gold and silver. Is that a key component of how you approach things?
Yeah, I mean, I've always been a little bit, not really mainstream. Yes, I guess the companies I've worked for, I've had private pensions. They invest in the normal 60-40 stocks and bonds. But maybe through my family background and having grown up in Brazil, like one of my grandfathers, he didn't like investing in the stock market. He had like real estate property. My dad wasn't into traditional investing. He put a lot of his savings in real estate property, and yeah, I'm ever since 02, for about that period after the dot-com bubble burst, and my private pension took a big hit. And I had a private pension through the firms that I worked for. I started looking at alternatives and started looking into gold and silver and more commodities. And I think, yeah, gold is more of a savings instrument. It's more like putting your money away and saving it, but a good kind of money, because if you leave your savings in fiat currency, like we've had for like over 50 years, it's losing value all the time, especially with interest rates being negative now, like in real terms. So I look at gold and silver more as savings and as money. And funnily enough, they do a job. Some people call it a dead asset, gold or silver, but they actually do a really good job in environment where you have a depreciating fiat currency system. They almost act as an investment, and you get more and more fiat every year from having gold and silver. And then when uh, I started buying a few gold coins, silver bars in 02, 03. And then I started looking into the mining sector as well, which is different. It's more speculative, I would say, and you have to be nimble in that space. And also commodities, I've been looking in general more for the last 2.5, 3 years, because uh, I sense that we're going through a rebalancing of the scales. We've had 30, 40 years of financialization of currency and credit, money and credit, going into technology, real estate, stocks, bonds, financial engineering, all the buybacks, internet, cryptos. And I think the commodity space, real things, uh, that's been kind of neglected. I mean, the top in commodities was in this century was in 2008, and we're nowhere near that top in the general sense, the broad commodities. So, um, and now we're seeing a lot of money starting to flow out, not just out of the Nasdaq and stocks in general, but also the bond market. So, even if investors don't shift all their funds to commodities, and they won't, of course, even if they shift a small percentage of that into the commodity space, I think it's going to make a huge difference to the commodity space and especially precious metals as well.
You speak a lot on your channel about, the Federal Reserve and what they're doing, as well as central banks around the world, kind of the insane monetary policy that's being in place these days. What are some of the challenges you see up ahead in our current economic environment?
Well, the biggest challenge is for the central banks is reversing the massive inflationary environment they've created. And I'm not sure if they're going to be able to do it. If anything, I think they have a very small chance of succeeding, of engineering a soft landing. And I think we're seeing already all the symptoms of the troubles that we're going through, we've been through, and we're going to keep going through. And mostly it's depreciating currencies, not just in emerging market in poorer countries, but also in Western Europe, North America. Stagnant economic growth, mainly because the policy of the last 15 years has been to create money and credit via the central banks, pump it into the public sector, government spending, and it's crowded out the private economy. So yeah, there's a lot of challenges, and I don't think they will succeed, and that's why I think it's also important. Uh, and this is again not financial advice, but I think it's really key that you have some exposure to real assets and have some of your savings outside the banking financial system. So yeah, the challenges are great, and I don't think they'll succeed. Uh, yeah, and there's a danger that they lose control of the narrative. They lose control of what they call inflation expectations, and we could see things get completely out of hand, uh, and even currency collapse. And currency collapse is usually happens when, yeah, people not only lose confidence in the banking system, in the monetary authorities, but also they lose confidence in the establishment, politicians, all the major institutions of, let's say, the media, educational university system. And yeah, I think the West is in bad shape in terms of that.
So, holding physical gold and silver is one way to store wealth outside of the financial system. And I think a lot of people in these legacy brand countries, Canada, America, a lot of Europe, they've kind of grown accustomed to the way things are, and they almost can't imagine that a collapse would happen or that they wouldn't be able to access their savings in the bank. Do you think it's possible that the banking system could break down, and people in Western countries might not be able to get access to their funds like we've seen in some other countries in the past?
Oh, definitely. I mean, in '08, it was a matter of a day, I think, or hours that the US, that people couldn't access their funds. I think a lot of money market funds broke the buck, so to speak. And I think politicians were doing speeches in Congress saying that they could have had martial law because the banks were collapsing. The thing about getting your funds from the bank is that you think you have $10,000 in the bank, but the bank doesn't keep those $10,000 in a vault. They lend it out 10 many times over, uh, not expecting that people are all going to come at once to take their funds out. So that's the fragility of the system, the fractional reserve system. And of course, it could happen in the West, and it happened in Cyprus, which is part of the EU. I think it was 2011. I don't remember exactly the year. People that had over the insured amount, I think it was 100,000 euros, they lost all those funds in the banks, especially not just individuals, but companies and businesses that need to keep a large cash flow. So unfortunately, for some businesses, they do need to keep funds in the bank to run it. It's harder, but I think it's imperative that people know that there is a danger. The funds you put in a bank are not yours legally in the West. They're an unsecured loan to the bank. So yeah, I think it's possible. I don't know whether it will, but the probabilities are quite high, or when it will happen.
So you've also mentioned before that in the event of some kind of catastrophic collapse of the currency, that the only things that will be left standing are gold and silver. Could you elaborate on that?
Well, I guess in terms of money and something that's used to exchange goods and services, that will be the only thing. But there are of course, during a hyperinflation, and I've interviewed a few people who've gone through this, like in Romania in the late 90s and recently in Lebanon. There's more than just money that you need in a hyperinflation. You need to have contacts in the community. You have to be in good standing with people in the community, and you have to help each other out. Um, Gold and silver will only go so far. I would say, if you can hold on to your gold and silver when you're going through hyperinflation, you will have done well. And actually, I think it's after the hyperinflation, when the dust settles, that you can put especially the gold to work, the silver as well. But the silver might help in terms of bartering for things during the collapse.
So you've also mentioned that when the price of gold, the paper price, fluctuates, it can make people uncomfortable who are holding it. And you kind of posed the question, well, what's the other alternative? Are you going to put your faith in fiat currencies and, corrupt governments that we're seeing all across the world now? And I definitely think you make a great point, because throughout history, all fiat currencies have gone to zero. So why do you think it is that people in our current era find that so hard to even conceptualize or believe could come to pass? Is it a lack of education? Is it the fact that in the West we've been living in this artificial economy for so long that we can't see the danger lurking in plain sight?
Well, I don't think it's the lack of education. I think it's just the wrong education, because the people in charge of the whole system, uh, the financial overlords, if you want to call them that, they endow the universities. They buy influence in government and in the curriculum of the educational system, and unfortunately, even in universities, unless I went to a university, and I never learned about the things that I learned later on in life when I started looking into the system around after the dot-com bubble. So yeah, it's just that they don't want people to know about the truth, I would say, of the kind of monetary system that we have. Maybe, and the people that did learn what money really is, and how the system is not fit for purpose, they're already a lot older, or maybe not even around. Uh, I mean, Jim Rickards sometimes he talks about these things, but I think he was probably one of the last guys to learn about this at university in the early mid 70s. But after that, I remember one of my professors at university, uh, economics, the only thing he mentioned about gold was when he said, well, in 1971, Richard Nixon closed the gold window, and that was it. It was a matter of seconds, but he did not elaborate or try to explain the consequences of Nixon's decision and what it meant. And and it's really weird because money is a or currency is such an important part of the whole commercial life of everyone. It's half of every commercial transaction, and yet we never ask ourselves, what is it really? And I think that's the problem. Maybe also the educational system doesn't teach people to think. They want people to just. I think it was the intention of people like the robber barons, for example, the Rockefellers and people like that, that the educational system was there just to prepare people to be good workers, and not ask questions. And I think that's the problem. Very few people do ask questions, and yeah, maybe not just like not teaching them about money, but also not um, asking people when they teach them to ask questions about things.
What are your thoughts on the manipulation of the precious metals market? You hear a lot about that online. You hear people who stack gold and silver complaining about it constantly. Do you think there is a concerted effort to suppress the price of gold and silver? And if so, could you break down why someone would do that, or some entity would do that?
Well, I'm not even sure if it's suppressing it, even though sometimes they do suppress the price. I think it's more to do with the fact that they don't want the general public to realize that gold and silver are very safe and that they protect you against fiat currency debasement. Because if a lot of people knew about that, they wouldn't want to play the fiat currency game. That would implode their system. They wouldn't be able to do a lot of the things that they do, finance a lot of their wars, welfare state, corporate welfare, and everything. And some people ask, if they do manipulate and suppress the price, how come the price has gone up over the long term? Well, because they can't keep it down over the long term because of the law of supply and demand. But I think what happened in the mid 70s, when the US made gold legal again, they had to find a way to keep the public out of gold. So there are some WikiLeaks leaked documents of correspondence between the State Department, the US Treasury, and bullion dealers in the Foreign Office in London, because London is the center for bullion trading. And they were asking the question, what's the best way to keep the public away from buying physical gold and from acquiring gold? And the solution was to start a futures contract on the COMEX for gold. There had been already a silver futures since I think the 60s, but no gold contract because gold was not legal. So in these memos on Wikipedia, they talk about the fact that a gold futures contract with a lot of leverage would make the market very volatile and keep the public away from it, because they would see gold just as another risky and volatile commodity. And I think that's what they do. That's the whole scheme, because if they didn't control the gold price through the futures and also through the over-the-counter market on the LBMA, because gold is really traded as well as a foreign currency. It's XAU, the ticker for gold, and for silver's XAG. Yeah, if they didn't control those markets, the gold price would always be going up in a straight line, and and their fiat system would have been finished long ago. But eventually, they will have to let the price go higher, because or else they'll lose a lot of the physical, because official holdings is only 17% of all the gold that there is above ground that has been like mined for historically. So it's not that much. And they try to suppress the price back in the 60s when we were still in the fixed rate for gold under the Bretton Woods system through the London gold pool, which was like an overt agreement of central banks and treasuries in North America and Western Europe to keep gold at 35. But by the late 60s, the French government said we have to stop this because we're selling all our gold to keep the dollar strong against gold. So yeah, I don't think it will last forever. And I think the Achilles heel of this system we saw in 2020 is that what the bullion banks do is that they lease physical gold from the central banks, and then they rehypothecate it. Let's say they lease a ton, then they sell 50 tons in paper. But when people start asking for physical delivery, especially the very wealthy and the big institutions, that's when the whole thing, that's when the bullion banks are going to have to cover, and they will know when that comes because they control this paper price.
There's a lot of talk out there these days about central bank digital currencies. Christine Lagarde's been talking about it. Powell's spoken about it. Do you think that it's realistic that there could actually be a central bank digital currency that is widely adopted or forced upon the people and they just accept it? And, there's a lot of privacy concerns with that. There's the fact they can automatically deduct taxes, track your spending, even potentially put a cap on or tell you how long you have to spend the money to kind of force you to spend it. Do you think this could come to pass? And in a situation like that, how does gold and silver help to protect us?
So the first question is whether we could have CBDCs. I guess our current system now, the currency is created mostly by the commercial banks, and the banknotes are printed by the governments or the central bank or the treasury. So it's not really a central bank digital currency. For that to happen, you'd need the whole private commercial banking system to collapse. And then the central bank would be issuing it directly. You'd have an account with the central bank. I think we already have digital currencies now, the way banking is done. But yeah, it is possible, and this could be the way that they want to take us. It would be a lot easier for the central banks to control monetary policy. They would be able to rein in the currency in the system or pump the currency in the system. They wouldn't have to worry about imposing negative interest rates because they'd have total control. They can track you already, which is something they can already do. As for gold and silver, it's just like now. I mean, we are in a fiat currency, almost a digital currency system, and gold and silver are still very useful to have outside the system. And I wouldn't see it changing with a digital currency unless they put capital controls on people acquiring gold and silver. And that's why I think it's probably not a bad idea to get some now while you still can. Yeah, that's the way I see that. And I try not to, I don't think a central bank digital currency will be better than a fiat currency unless it's backed by something like gold and silver. And I don't think they want to do that because they'd be giving up control.
Well, thank you so much for joining us today, Mario. It's been an excellent conversation. Could you let people know where to find you if they want to hear more from you?
Yeah, it's Innecco64 on YouTube. I make a video there, virtually every day, and a live stream on Sundays at 9 p.m. London time.
Great. I'll put the link to that channel in the description below so people can find it. And thank you so much. We'll have to have you on again in the future to continue the conversation.
You're welcome, Jesse, and nice speaking with you, and good luck with your channel.
If you enjoyed this interview with Mario Innecco, you'll want to check out my discussion with Endgame Investor newsletter author Rafi Farber, where we break down why gold's main value is as hard money, how gold relates to the fundamentals of the Austrian School of Economic Theory, and Why holding gold is essential in the end game of hyperinflation.